JJ the CPA here. Hope you're doing well. So cryptocurrency tax, virtual currency, and the taxes related to that, no matter the platform that you're on, it's all treated the same for IRS tax purposes. And really we're talking two categories here: capital gains or losses, so capital transactions, or ordinary income. So outside of you purchasing cryptocurrency, so outside of you go onto the platform and you hand over your dollars, your US money, and then you receive cryptocurrency in exchange. So outside of that, if you receive any cryptocurrency under any other conditions, that is ordinary income to you. If you provide a service or sell a product and you receive cryptocurrency in exchange, then that full amount is your gross income at the ordinary tax rates, minus, of course, any expenses you have related to that. If there's any other reason that somebody or a platform gives you any cryptocurrency, that is going to be ordinary income no matter how long you held the cryptocurrency. So what am I talking about? Well, we know that there are certain platforms that after a certain period of time of you holding your cryptocurrency with them, they give you, whether you call it a bonus or additional income or whatever it's called on that platform, that in essence is treated the same as if it's interest income. Doesn't matter that they don't call it interest income, but they gave you money for it just sitting there. The IRS parallels that to interest income, which is subject to ordinary tax. Now, if they pay you something and they call it a dividend, or if they pay you something because you promoted it, or they pay you something because you did a tweet or talked about it on social media, it doesn't matter, but no matter how you receive it, it's ordinary income. So if you're a sole proprietor and you file Schedule C, or you're a farmer and you file Schedule F, or you have an S Corp or a partnership or a C Corp, name it. If you're selling a product or service, when you receive the cryptocurrency, it's just the same as when somebody paid you. So whatever that fair market value is, then that is what you're going to recognize as ordinary income. What's ordinary income? All that means is that it's not capital gain income. So whatever your regular old tax rates are, then that is what you're going to pay tax on that. Now, again, if you're in a business and conducting it, you get to deduct your expenses just the same. So you have to just think of it as, it doesn't matter, they got cryptocurrency, virtual currencies, the same thing, or you got money, or a check, or you got paid by credit card, right? It's still income to you at whatever value it is at that time that you received it. Now let's talk about the capital transactions. And this one's a little tricky, but actually I'm hoping to break it down that it won't be. So if you are not a business owner and you are not selling anything and then getting cryptocurrency, so you're just an investor, which is probably most of you. So when you put money in, I just now want you to think of it exactly the same as stock. Cryptocurrency, virtual currency, is treated just like stock. And so all we have to do is look at, well, what are the rules related to stock? Which is this. So when you buy it, that's your cost basis, whatever you bought it for. And what would that value be? Well, however many US dollars you gave up, that is your cost basis. So then when you sell it as an investor and you receive US dollars, well, then that would be the fair market value that you sold it at. And you would compare that sales price to your cost basis, and that is your gain. Now, of course, it could also be a loss. But either way, that is then how you determine your taxable event. So if it's a capital gain and you held it less than a year, then that's a short-term capital gain. If you hold it over a year, then it's a long-term capital gain. Same thing if it's a loss. Less than a year, it's a capital loss that's short-term. Over a year, it's a capital loss that is long-term. Now, when you receive, when I say, oh, here's might be the tricky part, but I hope to break it down simply for you. But when you receive any cryptocurrency, this virtual currency, for any other reason besides you being a business owner. So you're an investor and you hold the dollars for a certain period of time and they then pay you something in cryptocurrency. Well, whatever that cryptocurrency is at that time that you got it for fair market value being, well, what was it worth in US dollars? Then that amount is income to you. But as I explained earlier, you're aware of that. But guess what? And don't miss this part. That adds to your basis because you had to take that amount of income into your taxes. So if you bought for $1,000 of US money, cryptocurrency, virtual currency, then your cost basis is $1,000. Now, if you held it there for a period of time and then that platform gave you $10 of US value of cryptocurrency, so it could be that you got a million whatevers or one whatevers or a fraction of whatevers, but whatever that fair market value is in US dollars, then that is the amount that you would recognize as income, as I just said, but then that adds to your basis. So if you got the $10, then your basis in that becomes $1,010. Therefore, when you sell it, that overall is your cost basis to compare to what it is that you are selling. Now, it works like stock in the sense that maybe that $1,000 buys you 10 of whatever the currency is. Then your basis is divided by the number of units, currency, coins, whatever the terminology is, then that is your cost basis in each one of those things. So if you bought 10 and you sold 5, then half of your cost basis would be used for your determination of your gain or loss compared to what you sold, including anything else that you received, in essence, for either holding it or promoting it. So the IRS has come out and has said several times that they want you to disclose to them if you have any virtual currency activities. And in 2021, it's no different, except one minor thing, and that is this. But if you, in 2021, have only bought virtual currency, that is your only activity, then there's nothing for you to do. However, if you had any transactions related to virtual currency, so what would those other transactions be? Anything other than purchasing it. Then you would check a box, it's right there on Form 1040, to disclose to the IRS that you had virtual currency activities. It is not, in my opinion, any kind of red flag. They're just statistically, in my opinion, trying to determine who's involved with this, what percentage. And then also, yes, you're right, they do know that you're involved with it, so they should see at some point some kind of transaction related to virtual currency, but they're not expecting it under any certain period of time. Now, the other part is we're hearing from the IRS that they're going to require the platforms, the brokers, whatever the other terminology you want to come up with, to report activities to the IRS. This is actually a relief to you, in my opinion, as the investor and even as a small business owner, because they're helping now to track your cost basis as well as then your sales. Because see, now with stock, if you were to buy stock today, that brokerage or whoever's handling that stock purchase for you is going to track what your basis is. And then when you sell it, they're going to track what you sold it for to determine what your gain or loss is. Now, when you're looking at capital gains and you're looking at capital losses, whether you're virtual currency or whether you're stocks or anything else that's capital, it all just gets mushed together on your tax return. So you may do disclosures, if you will, like I just indicated, that you're involved with cryptocurrency. But other than that, you're reporting the transactions, gains and losses. So the thing I want you to note, though, is because it is a capital transaction, if you have losses related to cryptocurrency, buying and selling, so now when you sold, you have a loss being that you got less US dollars than what it is that you bought for. So the downside of capital transactions is that you only get to deduct capital losses to the extent of capital gains. Now, really, technically, you offset capital losses that are short-term against short-term capital gains first, right? Because short-term is taxed at ordinary tax rates. Then you would offset long-term losses against long-term gains. And those are the amounts that are then taxed at your capital gain tax rates. So when you're then looking at losses exceeding short-term gains, then those losses can be used to offset the long-term gains. But overall, what I want you to have as a takeaway is that when your overall losses exceed your overall gains, whether it's stock or cryptocurrency, your losses can only be deducted to the tune of $3,000 a year. Now, hear me on this. You could have $1 million in gains, capital gains, and you could have $1,010,000 in capital losses. So yes, you will be able to use 1 million of those losses to offset 1 million of those gains. But you would have, in that example, 10,000 of capital losses that exceeded capital gains, right? So it's unlimited of your losses to offset gains, but when your losses are more than your capital gains, those losses are only deducted to the tune of $3,000. Now, the good news is that you do get to carry over those losses. And when those losses carry over, it's indefinitely for as long as you live. And if you are married filing jointly, as long as that your marital partner is alive as well. But the thing is that if you're using any kind of tax planning, if you will, and you want to incur losses, just know that losses offset capital gains, unlimited, but your capital loss that exceeds that is then limited to $3,000 a year. Now, lastly, I'm going to note that if you have a business and you receive cryptocurrency for your services, that now becomes your basis. So if you were to receive those dollar amounts and then cash out for US dollars, then that would be a capital transaction. So it wasn't capital when you received it, never could be for goods and services, or for promoting it, or for holding it for a period of time. Any of those dollars you're getting, those are going to all be ordinary income. But when you receive them, that fair market value in terms of what was it worth for US dollars, that is then your basis for when you convert it to US dollars. So you received cryptocurrency. What was the fair market value at that time in terms of US dollars? That's now your cost basis. Why? Because you took that amount into income. So if you receive $100,000 in cryptocurrency for services or products or holding it for a certain period of time or promoting it, then your basis in that cryptocurrency and in that quantity is $100,000. Now, when it is that you sell it, you would then compare what you sold it for against what it is that you, in essence, bought it for. So even though technically you didn't buy it and you just received the cryptocurrency, that is still your basis. So if you received $100,000 and you held on to it for 3 months and then you cashed it out for US dollars, that's going to be a short-term capital transaction. And you would simply compare what is the value, fair market value, when it is that it became US dollars compared to what your cost basis is. So if you sold it and it was $110,000, then you would have a $10,000 capital gain. What I want to be clear on is when you receive the $100,000, that is ordinary income. It creates the basis for you. When you then convert it to cash and it's a capital transaction, then that growth would be a capital gain. Now, because that's short term, that's taxed at ordinary rates. If you held it over a year, then it would be at capital gain tax rates. Now, as it relates to capital gains, I'm going to give you a link to the IRS website, but it's 0%, 15%, and then 20%. And it's based on your overall income. Yeah, it's not straightforward. The reason I'm giving you a link is that there's a million scenarios that you could run It changes based on your filing status, meaning single, married filing jointly, head household, married filing separately. It's different every year due to inflation in terms of when you get to those tax rates. So at the end of the day, the crypto tax is very much recognized as true currency. I don't know why it wouldn't be otherwise, because all the way back to the dawn of the time of determining what your tax is, it's always based on something of value that was received. So whether it was furs or corn or a trade amount, right? That's still income. And the way the IRS sees it, doesn't matter that it's cryptocurrency or virtual currency, it's currency. So hopefully that'll help as a start. I'll have some other videos to come related to this, talking also about, am I into cryptocurrency? What are my thoughts about cryptocurrency? As well as I actually have a few videos for those that are a bit more my age, that are maybe thinking about virtual currency or cryptocurrency in terms of should you get involved. But hopefully this helps from the tax side. And again, like I said in the beginning, you just treat it like tax. Now, I am going to give you a link to a video. I've never done this before, but I'm going to give you a link to a video to somebody else on YouTube, Max, and he has a great video also walking through this. He calls it the ultimate tax guide to cryptocurrency. And it very well might be because he put a lot of time and effort into graphics. So I typically am just going to tell you, but he put some time into the graphics and he walks through more of the detail of what capital gains are. So he talks about the cryptocurrency tax and how it works just the same in essence of what I'm giving you, but he takes it one step further for those of you that maybe aren't tax professionals or you haven't dealt with stock before, or you're not really sure and you'd like some additional information on this. I'm going to give you a link to his video, so check it out. Again, he put a lot of time and effort into not only his graphics, but kind of engaging you into that video. Now, I will mention he does have a lot of videos related to cryptocurrency, and he does seem to have done a lot of research related to this. And I believe based on his videos, he is involved in cryptocurrency. So just as Max tells you in his own videos that he's not a financial advisor, so therefore you wouldn't take any quote unquote advice from him, just the same as you wouldn't take any advice from anybody else on YouTube, including me, because it is meant to be a guide for you to apply to your circumstances, and it is meant to be a way that you can go to your own advisors and have some education behind it. So I will tell you this, Max, during the era of PPP and the EIDL, I watched a few of his videos, and unlike anybody on YouTube, I always found him on point. There were many others putting out videos, and I thought, where are you coming up with this information? So I've grown to trust Max and his videos, if you will. But all I'm saying on that is that it's not an endorsement, and it's not, well, whatever Max says you should do, but guess what? Max would tell you the same, if you will. So with that being said, first time I've ever done that. Hopefully you get a little bit more info out of that, and you come on back to also my channel. I know you may check out some of his other videos. So hey, if you made it to here and you're not a subscriber, I'd love it if you would. Click it. I don't make any extra money, but I love to see the subscriber numbers go up so that I know I'm putting out videos that make sense to people and they do want to watch it. All right, with that being said, thanks for tuning in. I'd love it if you'd subscribe, and then don't you ever forget, you've never met a CPA quite like me. All right, have a great one.